Good morning, everyone, and welcome to Caseware Get Ahead course week 2 for Audit International Inventory Count attendance. This topic in particular has been selected by Caseware Africa because when executed poorly, it can cause frustrations for both auditors and clients. And this can sometimes lead to inefficiencies as additional procedures may be required to make sure sufficient appropriate audit evidence has been obtained. Therefore, it is crucial for the audit team to be well prepared for inventory count procedures. It involves the planning for the count in advance, preparing the team for tackling any issues during the count, and also preparing to be able to perform any post-count procedures in a timely fashion. In this webinar, you will learn about what you need to be prepared for your next inventory count. An overview of what we are about to cover in this session. We will go through the ISA requirements around when is an inventory count required. We will also go through your inventory count instructions. We will use the documentation found in Audit International. Then we will talk about locations. What do you need to consider in advance when you are preparing for your count? Then we'll discuss and share with you some examples around client count performance, the impact of estimates, and the ISA requirements and the impact on your ISA 510 around your inventory count. Sorry, not 510, but 501 audit evidence. Then we'll go through our test counts procedures and the wrapping up procedures. We'll finish the session with the document requirements for your inventory count attendance. So all the attendees are currently muted. You can make use of the question section of GoTo to ask for any question. If your signal is lost, please exit and enter the webinar back again, or you can use your web browser or your application rather than the browser. We'll make sure that the recording comes to you by end of next week. So please be on the lookout for that particular email. Let's move to a quick poll. I'm going to share the poll now. It's just to make sure that we're all aligned in terms of what we are going to have for today. So have you received? Do you have today's course material downloaded? Yes, not yet. So I see most of you has not yet downloaded the course material for today. Please refer to the handout component of the GoTo application. You can download the slides that I am about to show you. I'm going to give you 1 minute to locate the handouts on your GoTo application. And I will also monitor whilst you are downloading the question in the question box. All right, so I'm going to close the poll for this one now and launch a second poll. So I really want to get to know more about you today. You know me by now, by the way. I'm Sandrine Fermat, talking to you from Mauritius. We've been together for 2 weeks. Now it's my turn to learn a bit more about you. So please do fill in that poll. What year of training contract you're currently in? Are you from a first year attending this webinar? Is it your second or third or final year within your practice? Are you a supervisor or manager? Or you are from an audit firm but not yet completed but you're not completing your training contract? Well, I see that we have a bunch of second and third final years in this session. We've got our first years as well. Hello to everybody. Yeah, I'm going to leave it open, leave the poll open for 10 more seconds. If you want to participate. All right. So the room is a mixture of all the first year, second year, third final, and supervisor and manager. I reiterate, we will have this session really going slow in order for our first or our new intakes to get in the information to digest all the new concepts. Of course, I will have you managers, supervisors in mind when I will be discussing the different concepts and make sure that you can also coach your different team members. Right, I'm going to close the poll now. Thank you all for your kind participation. One last poll. Did you attend last week's introduction to auditing in AI? I was talking to you from our Johannesburg office. Were you there? Were you able to see the recording if you were not in the session or not yet? Okay, I'm going to leave the poll open for 30 more seconds. For those of you who want to participate, right. Thank you all for your participation to that quick poll. Most of you have attended to the training last week, so I trust that you still have your audit file, Caseware working paper, Audit International file with you. And those who were able to watch the recording, I trust that you've managed to get your hand the um, on the engagement file. And those who have not yet, either you have not yet received the AI recording that was shared on Monday. I'll make sure I'll take your names. If you're asking the questions in the chat box, I'll take your name and ask our marketing team to share it with you. For those of you looking for the recording of yesterday and Tuesday, please note that this will be made available next week earliest. We are busy making sure that it's all compressed nicely to be on our YouTube channel. Okay, sorry guys, I'm just drinking some water. It's very, very hot in Mauritius. Apologies for that. All right, so now let's kickstart this super interesting session around inventory count attendance. So when is inventory count required? The requirement of an inventory count comes from ISA 501, audit evidence. We've got some specific considerations for selected items. Here is an extract that I really want to take you through step by step. If the inventory is material to the financial statements, the auditor shall obtain appropriate audit evidence regarding the existence and condition of inventory by attendance at the physical inventory count, unless impracticable to evaluate management's instructions and procedures for recording, controlling the results of the entity's physical inventory counting, observe the performance of management's count procedures, inspect the inventory, and perform test counts. And performing audit procedures over the entity's final records to determine whether they accurately reflect actual inventory count results. So the evaluation of the instructions and procedures that you use to record and control the count that you are going to be performed is as important as our test count. So the clients, so if you look at section 4AI 2, 3, and 4, and 3, the documents used by the client is as important as your test count. I want to emphasize that if inventory is material, then this ISA is applicable, procedures must be done. If you recall, for those of you, most of you were there last week, if you recall our audit international methodology, risk assessment, SCORBY, and procedures. For inventory, the procedures are not driven by risk raised, as with other sections in the audit. For inventory in particular, whether there is a risk or not, if the inventory is material, account must be attended. So now what I'll do, I'll show you where to find the inventory count attendance work program in Audit International, and then we're going to discuss how to practically complete that work program. So I'm going to escape that presentation for now and go to Caseware working paper. So if you have not yet opened your wrap-up audit file, engagement file, please do so. And remember the way that we've opened files, that we've learned how to open files in Caseware. File open, under your recent files, locate your wrap-up manufacturing limited, audit engagement file, double click insert your username and password, then you'll land on digital dashboard. I'm going to give you 3 minutes to be able to open the file. And then we can proceed with the next part. I'm still online monitoring the different questions being asked. I'm simply giving you guys enough time to open wrap-up manufacturing engagement file. If you have recently joined us, welcome to the the inventory count attendance get ahead course. Make sure that you have your engagement wrap-up manufacturing limited audit file opened. One more minute. If you have just joined, welcome to this session. We're just giving enough time to our delegates to open Wrap-Up Manufacturing Limited audit file. So the first thing that you will see when you open the file is the digital dashboard. You can either decide to go through the risk response section and locate inventory, or alternatively, you can also activate Document Manager by clicking top left of your screen Documents to open the Document Manager, and then locate. Remember, we are in the inventory count attendance session, so we want to open the folder Lead Sheets and Working Papers, expand the folder Current Assets, then under folder 405 Inventories, you will have all your audit procedures in case view documents for inventory and your document 405, which is the automatic document. The document that we want to open is the inventory count checklist. Double click to open your document. And guys, whilst you are busy opening the document 405.12, please take a moment to have a look at my screen. And I'll take us back just a little to the ISA 501. If you would remember, I mentioned upon the introduction of this session that the requirement for an inventory count comes from ISA 501. And if inventory is material The ISA 501 requires that procedures should be performed. Now, how to know if your inventory financial statement area is material? It is from your FSA. If you should follow my cursor, top left corner of my screen, that's the FSA document, Financial Statement Area Worksheet. We've seen that document last week. We've introduced it as your nervous system in Audit International. If you scroll through the FSA list, you will get to your inventory account or line item. You'll know that the materiality assessment has been done by our managers. So all the managers in the room, you would have already prepared that document to submit to your first years, to your second years. You already have the balances here and your materiality assessment. Now, for those of you involved in the inventory count procedures, this is how you can view. Okay, should I go and perform and look to the inventory count checklist 100%? It is, because inventory is material. You will also know that we don't have any risk raised for inventory, but as prescribed by ISA 501, whether there is a risk or not, if inventory is material, account must be attended. I just want to check out the pulse in the room. If you can all raise your hands, just let me know that you've been able to open your inventory count checklist. Use the hand raise option on go to, and then we'll go into the documents. Because guys, this session is made for you. We really want to make sure that I'm talking when you have your documents opened. You can see some reactions there. Thank you, Joseph. Thank you, Shelter. Thank you, Kia Lebuga. Thank you, Amanda, Regan. Thank you so much. Waiting for more hands to be raised. A few more seconds. Thank you, Tiro. Thank you, Boyd. Tsitsi. I can see some familiar names in the room. Hello, Yusuf. I see your name here. Thank you, Wandu. Okay, more hands, guys. Remember, this session is made for you. Let me know by raise of hand that you have successfully opened your inventory count checklist. I see that 80% in the room have not yet raised hand. I'd suggest to give 3 more minutes to everybody for those who are not able to open inventory count checklist to do so. And then we'll go really practical. Procedures per procedures. So 3 minutes to everyone to open, for those who haven't yet done it, to open inventory count checklist. If you have recently joined, it is found on your document manager. You can locate the document 405.12. That's the inventory count checklist. Thank you, Elizabeth. Thank you, Nelson. More hands are being raised. I appreciate. Thank you. I'm still online, guys. Just giving you enough time. If you can, please raise your hand that you've been able to open your inventory count checklist. All right, I think we have to move to the checklist now. I'm just conscious of time. It's already half past the hour, and we will be giving you some breaks to ensure, yeah, just some comfort break. Make sure the concentration is here. So when you open the inventory count checklist, the first thing that you will see, and remember from our previous sessions, you'll see your current balance, prior balance matrix, your materiality matrix on the top. Of course, since inventory is not driven by risk, the table on the top and the procedures will not have anything. So what you need to do is scroll down to look through your different procedures. Just want also to display the document guidance. If you want to see the applicable ISA to this document, this can be activated by going to Options on the top of your screen, then select Document Guidance. And you've got here a guidance that you should read through, make sure that you understand, and then scroll to the first procedure. So let's go through the first procedure. Identification of all locations where physical inventory is held. You're requested to arrange to observe the inventory counts in locations where material values of inventory exist. Consideration could also be given to attending one or more or other locations on a surprise basis. The assertions being tested here is existence, accuracy, and valuation. Now let's go in more detail of this procedure. And I've got a very nice slide to go through. So the first point is to ensure that each location is visited by the firm or our associates, or in case of less significant locations, by independent management of the client. So we would want to visit each location to get that comfort, or at least some comfort, about the counts at all the locations. But you would agree with me that it is not always possible or practical to go to all locations. That's why here it's mentioned to consider independent management. That independent management can act as a control over fraud. And who would be that independent management? It can be an alternative supervisor who is not normally involved with the inventory. An example could be an internal audit manager. He could supervise the inventory counts. Would you accept the warehouse manager and his team? No. The warehouse manager and his team would then not be involved in the count at all to reduce risk of collusion. Second point, arrange to observe the inventory counts in locations where material values of inventory exist. Again, we're referring back to the relevant ISA 501, the material aspect of the inventory. Consideration, I've already mentioned that, could also be given to attending one or more other locations on a surprise basis. And that's very, very important. In the scenario where you've got different locations across the county, across the country, then instead of telling the client, okay, I'm coming to that location for the attendance of stock counts, please do so on a surprise basis. And I'm gonna come in a few moments and discuss about the reason why. The consignment stock provided to a customer, that's another item to consider. So when material, the standard require you to confirm existence and condition by performing one or both of either request confirmation from third party regarding the quantity and condition, and performing or other audit procedures as appropriate in the circumstances for consignment stock. In respect of rotation schedule, now, some firms, some practice implement a rotation schedule for those clients that you may have with multiple inventory locations. Now, what you need always to go back to is the source, the ISA 501. If you're writing down, guys, please do. I encourage you to go and read it to the fullest. I'm only doing an extraction because obviously due to time constraint. But the standard says material locations would usually always be counted, and then a rotation would usually done for the balance. Now, using our professional skepticism, judgment, and knowledge, usually it's important, it's a good idea to ensure that we visit each location during a cycle to ensure instructions are constantly followed and controls are appropriate across all locations. We want to make sure that the instructions given by, let's say, the management at the client is being followed around all the warehouses. Are there any inconsistencies? Are there any items that we should consider when evaluating the different procedures to be performed? Remember, we're doing all of that. We're going to talk about in a few moments the documentation that will be generated from all of these. Now, in the event, I think it's important, it's not mentioned here, in the event where you are unable to visit a location, or you have requested some other auditors to assist you in an inventory count, but still they are unable to visit that location. So what you need to consider in that case, do to talk to your managers, to talk to your supervisors. What does our methodology say around this scenario? What are the working papers that you fill in? Now, if you are asking help or requested other auditors to visit a location, make sure that you prepare already and send already all the contact details for the other firm. Make sure that you share your working papers, the correct instruction. Possibly brief the team, counting as well. Now, this is in the event you're requesting help or you're going to a location. There can be another scenario where you are requested to assist another auditor in performing the different assistance to, or to assisting to the different stock or inventory count in the different locations. In that scenario, when you're requested to assist somebody, make sure that you follow the right instructions. If you haven't received the instructions, ask for the instructions. To whom to ask it? To that person who requested you to go there. Make sure that you know the different locations, the address, and you have and make sure that you also have the contact details. Now, I'm trying to make you think both ways. You are going as the service provider, as the auditor, or you have requested help from another auditor, or the other scenario where some other auditor requests you to attend to a location. What you need to, I'm sure that you have now realized, whatever scenario, the point is your ISA 501 will apply. It's the same requirements in the standard. Moving to the inventory count instructions. I just want to quickly go back to, let me see my taskbar. Okay. I'm still on procedure 1, and we're delving a bit more into the inventory count instructions. Now, first of all, the question that we usually ask ourselves as a first year or second year, how do the client staff know what to do? And usually that written instructions will be provided by the management at the client staff. This particular set of written instructions will be extremely helpful to you and can be assessed. You should usually be able to assess those instructions before going on audit. But of course, we know, for those managers smiling in the room, we know that often the written instructions are not provided or not issued by the client. What do we do now if we don't have those written instructions? How are we going to make sure that the staff at the client know what they're doing? Second prize then would be to be present, to be at the warehouse when verbal instructions are given to the staff, and then assess the relevant procedures to follow, the relevant instructions given to those staff. Are they following those instructions? Now, what if, remember, we're in Africa as well, it's the same in Mauritius. What if we don't have these the written instructions, were not able to attend the verbal instructions. As a last resort, what you can do is inquire from the staff present at the count itself whether the instructions were given and what was covered. Now, it's important for us as a first year to know how we ask that question. And I'm smiling, I'm thinking of the figures of all those supervisors and managers in the room. So I'm sure that you coach your team to ask open questions and not like dead-end question like, did you, like, let me give you the right example. So let's say you want to start with an open question, like, what were the instructions provided to you by your manager, or what were the instructions provided? Or you can go to more specific questions as well, like, were you informed about recounts, or did your supervisor speak about the recounts? Like open-ended questions where they need to elaborate and give you details so that you can then fill in your own documentation. Going into more details of the inventory count instructions. And this one procedure, the first one, the consideration, an accurate physical inventory can be taken. This procedure talks to procedure number 2 on your Audit International procedure. So if you look at procedure 2, it says, obtain, review the inventory count instructions. We've just discussed about that. Then check the following. The first one, an accurate physical inventory can be taken. So you want to, why would you do that? Ensure that an accurate physical inventory can be taken, or ensure that inventory, no, that's fine. Ensure that physical inventory count can be taken. So this is to count, to have a count as accurate as possible. And if you look at your audit procedures, once again, I'm jumping back to the screen because I don't have 2 screens, so I have to jump back again. The assertions being tested here is existence, accuracy, and valuation. Having an accurate physical inventory count, make sure that any slow-moving, damaged, obsolete item can be identified to ensure that any provisions, any impairments are accurate and also have been provided in the books. Instructions on what to do with the items, that it's not only counting, it's what should you do if you come across a damaged item, an obsolete item. It's not just about counting, it's about the accuracy of it. The second point is control will be maintained over the movement of inventory if production is not temporarily altered. Here, again, this is to make sure you have a count as accurate as possible. If there is any movement or anything happening during the count, then ensure that the count is accurate. Then you have the inventory counts with inventory counts will be adequately supervised and checked. So here again, the reason for performing that or to consider that procedure is to ensure that someone is responsible in providing guidance to the client staff. Like in the example I've given, like an independent management, could be an internal auditor, somebody independent from the warehouse, is there to guide the client staff. Usually, you will not accept the person responsible for inventory because you know what that means, eh? Because this, you don't want the person the person responsible for the warehouse to give the instructions, obviously, because this would be your control against fraud. And that's your preventing and detecting material misstatement components. Moving to section D. Inventory cannot be counted twice or missed from the counts. Again, the reason to do that is to ensure that the count of inventory is accurate as possible. Remember, go back to your definition of ISA 501, go back to the definition of what is inventory, and go back to what is your role here as an auditor, as we've explained last week. What is an audit? What's your role? So you have always to go back to the source. Consignment inventory will be excluded. So we've explained a bit about consignment inventory. So usually this should not be included in the count as the client has no rights to it. So if you remember what is a consignment inventory, so the client will have the inventory, the product or the goods, but then only when it is sold that it will go through the books. So consignment inventory will be excluded. Then inventory, the procedure F, inventory will be appropriately segregated and organized to facilitate the counts. Again, this is for your accuracy. I also tend to say it's also for the completeness of the count and the results. So if it's not correctly organized and when you're counting a part of or you're assisting the count, no, it's not you counting, but you're assisting the count of the inventory of a section of the warehouse, then you can see it moving all around, then this procedure will then have failed if this is the case. Section G, in transit and warehoused inventories will be included in the count. Why would we do this in transit and warehouse inventories? Why would you include it in the count? It is again to ensure completeness and valuation of the inventory of the client. All inventory delivered before end of the count is included. So all the delivery, all the inventory to be delivered to the customer on the day after or the day after the count should also be included. Any inventory delivered on the day of the count is therefore excluded. Here, in that particular procedure, your knowledge of risks and rewards and control considerations should be correctly applied. Okay, we go back to the PowerPoint and quickly check out if we've covered everything here. Should be all aligned. Cannot be counted twice, 100%. Inventory will be appropriately segregated and organized. Okay. So we're moving to the client count performance. And before I do so, I see we're already noon on my side. In a few moments, I'm quickly going to switch my attention to the questions list to make sure that we've answered all your different questions. And then I'm going to suggest that we take a 10 minutes break before we come to the next part of the session, which is about estimates, the performance of the count, and the wrapping up. So before we go to the break, let me quickly look at the questions. I can see there has been quite a bunch of questions that have been already answered. Okay, so I see a question from you, Yusuf. I will answer your question just now. So we'll take a break and then I'll come, because we have got to discuss quite a bit on it. Then I'll come to answer your question just now. All right. I think we can have a short break now of 10 minutes. And then when we come back, I'll come to your question, Yusuf. Then we'll continue with the client count performance. Please do enjoy this 10-minute body break and see you back, everybody. So I've given you more than 10 minutes today. Again, we read your feedback and we do understand some regular breaks is quite important. So welcome back, everybody. I hope that you have your water, your coffee, or your tea. If you're from Mauritius, we really love tea. I'd like to start with a question from one of our participants. And again, we try our best as you've provided us feedback to share more questions from the participants so that we can all learn from each other. And it's a very, very interesting question, which is, if it is impossible to visit all locations, because remember, we were doing inventory counts and we've seen that as part of your ISA 501, as part of the procedures, that you should ensure to visit the locations, each location by your firm or your associates. So if it is impossible to visit all locations because of high costs, is it of best practice to collect inventory certificate from the management despite the fact that the inventory is material and of high risk? So that one, Yusuf, you've got me pondering, you've got me thinking, and yeah, doing some brain gymnastics. So if the inventory is material and of high risk, let's agree on that. Inventory, material, and high risk. So one would consider getting another auditor to attend the stock count on the firm's behalf. To attend the stock count at the other location. I would prefer to avoid having to rely on management representations for such material and high-risk inventory. Now, if we're being practical, if there are too many locations and it's far, or let's say it's your favorite grocery store, there's so much of them, then what you could consider is to choose or select a number of locations to attend. So if you would recall the presentation that we've done so far around the considerations when you're performing your inventory count, then you could consider the highest risk location. You might want to attend to that one, or the locations with the most movement. Let's say you know that let's say in Africa, in the Durban branch, even though stock count is limited, at year end, you've got the highest movement. Then you would consider that location. You could also consider a few smaller other locations on a rotation basis. Remember the surprise visits and going to the different small other locations. You can pick up, choose, I don't want to give a number, but like 5 locations, one with a higher risk, one which is material, one which is a medium risk, one which is most movement, most known, and then the rest of the locations in the 3 years to come, you might want to rotate with it. Now, just one last thought on that inventory certificate is, remember, we are attending the stock count as an auditor. That's our role. The role is to test if the client's process or control procedures of this whole ecosystem of counting the inventory is working or not. That's the core of this particular duty. Now, if we can get the evidence, or we should be able to get the evidence by attending ourselves or getting other auditors to attend, because remember, we're giving our opinion that the process and the control procedures are working. So now, how would you use that evidence with that management representation, that certificate signed by management? How will you be able to say that you're confident, using your professional judgment and skepticism, that the process and control procedures have been or are working? So there's a lot to talk about that, Yusuf, but yeah, I hope that it's sparking some discussions around the room. The new intakes, please, if you have any questions around that, do go to your managers who are in the room, look for coaches who will assist you in that. Okay, how interesting, eh? Let's now move to our client count performance. Now, remember, we are assisting at the client count. So the count date that we want is the year-end count. The client needs to have all the procedures in place to ensure that the year-end number is correct. In other words, remember, you have to go back to the base, to the basis, or how do you say, to the source, the trial balance, and the inventory listing. Because ultimately, this is what we're giving our opinion on. This is what we intervene at the trial balance level. So you want to ensure that the client procedures, the client have enough procedures in place to ensure that the balances in the trial balance and inventory listing are adjusted as appropriate based on the count results, but also taking into consideration account transactions in that particular period. If the count is performed before year end, the counts need to be rolled forward to the year end numbers. So we've got a very nice slide here where you've got the inventory count dates and all the transactions being performed or accounted for up until the year-end date. So that is in the event the count is before year-end. So then you've got, if the count is after year-end, the count needs to be rolled back to the year-end numbers. So we will perform similar procedures for both our rollback and roll forward, because the test count is probably the same day as the client or close to their counts actually. In the case of audit procedures, you would want to verify the occurrence and the accuracy of each of the transactions which took place within that period between the count and the year end. I'm just trying to think of an example. So let's say if there was a purchase, we need to agree it to the supplier invoice. We all agree with that, right? If there was a sale, we want to agree it to the signed delivery notes, or maybe any other supporting documents which will then prove that this transaction occurred. So whatever is in yellow here, whatever is before the roll forward or the rollback transactions, each and every of them needs to be verified. Oops, I went too fast. Then, if we still stay under the client count performance, the client's planning for the count should include the clearing, rearranging, and packing of all inventory to facilitate the counts. Again, that's a requirement of your ISA 501. Observe the care with which the client's employees are following the count instructions. Are they attentive to the instructions? Any deviations from the instructions should be brought to the attention of the supervisor. Now, if you think of when inventory count is not arranged, let's think of that scenario. Can you be sure that all the items were counted, or that the items that are all this that are the same are all together? So let's say, for example, where we're saying in the absence of clear instructions, right? Let's say we're looking for some plates in a kitchen, but they're packed across the cupboards in the kitchen, and some are even in some drawers. So what will happen is you need to find 10 of those plates, but now you have to play like a hunt and move around to get to the 10. But we're human. What would you usually do? Where if you move around to look for you can't see me on my screen, but I'm using inverted commas, those 10 plates. You would hunt for the 10 and you'd stop looking as soon as you get to the 10. And that would not be correct. There could be more plates somewhere else. So that's important to have the clients planning for the count, having everything cleared, rearranged to facilitate the count. So the point of the kitchen example is just to point out, it's not just about counting, right? It's not just, okay, we've got 10, I'm going to count, bam, 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 10. It's all about having an accurate count. Now, when an inventory count is performed on year-end balance, this will be done once a year. So you can then assess the instructions and observe the count, and this gives you a more comfort over the functionings of the control over the count at this particular point in time. So by observing the count, which is done only once a year on the year-end balance, then you're simply observing the controls. You're going to see how the different clients, employees are doing or following the counts, the instructions. And by simply observing, this gives you evidence of the control over the inventory that you can obviously document on. If you don't observe the count, if you can't observe the count, then you can inquire from more than one employee, ask them about the count and corroborate with the instructions. Can listen to them. Have you been able to find? No, you're going to ask based on the instructions that you've received from the client. What about now the scenario if the client staff is not following the instructions? Then this gives you a risk that the count may not be accurate. And this reduces your assurance obtained from this procedure. The course of action, as seen on my screen, is to then report to the supervisor, to the management of the count. Like it would be like in the example of this morning, the internal audit, the internal auditor, that the count, there are deviations from the instructions, and that to rectify this gap in control, they need to re-inform about the procedures, the instructions. Now, if some items are estimated rather than actually counted or measured, we are now touching base on your ISA 540, your revised estimates. Then review the procedures applied to estimate the quantity, evaluate whether these are appropriate, review the estimate, ensure it is reasonable. You could also go through the management experience. Now, there are various elements to the estimate, and the number of inputs which we can verify to that underlying information. This includes the expertise of the management under which we want to rely on, the process which assess using our logic should be applied. The questions that you will be using, again, guys, I'm just touching base a little bit, very lightly on ISA 540. So you're going to use your professional skepticism to ask the question, does this process make sense? Does the process align to the actual, let's say, process of manufacturing the, let's say, the yacht with all the bits and pieces and materials required? Does the process align with the manufacturing process? Can it be broken into bits and pieces so that you can locate or measure with more accuracy the different items? How do they know which stage the items are in a process? So all of these questions should pop up from your application of ISA 540. You could also ask yourself by looking at the SCORP, do the costs align to the percentage completion? And as part of your estimates, ISA, of course, I've already mentioned the professional skepticism, but the ISA 540 also mentions the use of more stronger language to challenge management, as this is an estimate. You want to give comfort that this figure is accurate. Your discount. So what about the procedures on your side? Reperform certain counts, if possible. Trace the quantities to the tags, to the rough stock sheets, or other, because remember, at the very start of the inventory count instructions, procedures, you've obtained those procedures from your client, right? So select some items on the list and trace to the floor. Go and check physically with your own eyes and marking down the items. So by selecting and tracing the items to the floor, you're looking at the list and you're tracing it back to the warehouse, you're testing existence. Does it exist? It's on the list. I want to check out whether it exists. Is it really found in the warehouse? Do you have to open a box to check the tag? Do it. On the other end, your discount will also include selecting the items on the floor in the warehouse and trace it back to the listing that you've obtained based on the client count performance. In this procedure, you're testing for completeness. You see an item on the floor in the warehouse. When I say on the floor, it's like anywhere in the warehouse, you want to take it back to the inventory list. Wrapping up of your procedures. If you identify now differences between your counts and the stock sheets, discuss with the count supervisors and follow up on these differences. And the follow-up is crucial. This cannot wait until the date of the audit. This is the responsibility of the counting team. Now, any differences that you have, recommended best practice is to deal with it on the day. If it is not possible, then within the next 2 to 3 days. And usually what we want to emphasize here is it's not the audit team's duty to follow up, but the count team. This must be done on the count day or just after, because you just cannot perform a follow-up count with the client months later when you go on the audit. It's too late. Will they remember? Will you remember what happened on that day? And always, like in any other scenario, I want to say life, disagreements cannot be sorted out later when no one can remember what really happened on the day. So disagreements must be sorted out on the day, latest within the next 2 to 3 days. Observe and make note of the stage of completion of work in progress. We need to make note so that we have evidence at year end of percentage completion. And this is part of your verification of the process. So document all of these stage completion of the work in progress, of the WIP. Moving now to the next part, which is around wrapping up. So Again, I'm also still referring to your web program that is open on your side. You have all your slides. You can also view all these slides. The audit step, the first one, is to ensure that the accounts are recorded in ink and that the counter and the checker sign the stock sheet or the tag. The reason is to prevent manipulation of the stock or the inventory, and of course to allocate the responsibility. If detailed inventory records are maintained, ensure that the differences between the counts and the inventory record quantity are adequately investigated, and any adjustment to the inventory records are authorized, very important, initialed by the account supervisor. The reason being, this is to establish, to have records of the reason for differences. It can be because of impairment, of theft, fraud, system problems, and also, of course, for the prevention of unauthorized changes. Now, I want to delve a little bit more into that part. For the authorization of adjustments to inventory records, the person supervising the count may not be that person, that someone who authorized to pass or to approve a journal. Like our example of that internal auditor, that independent managers who supervise the account, he may not be the one who will be authorizing journal entries for any adjustments. Please do consider any additional authorization level that may be required at the client. Finally, for the checking of items marked off, this can be done while you observe when you do the test count, and also when taking a general look at the stock items. Now, you can, based on your firm's methodology, go through this step, for checking the items marked up differently. So before attending the stock count, we recommend you to read through the procedures, familiarize yourself with the various steps, ask your managers for any guidance or any coach around that particular section of your audit. Test that there are no empty containers or empty spaces where goods have been stacked in solid formations. This is the reason for that, of course, is for existence and prevention of manipulation or fraud. So I remember back in the days, I had an example where I was in Mauritius. It was really my very, very first year. Back in the days, like 20 years ago. I was in that store with packs of rices. Like, in Mauritius, you've got those rugs and you've got rice in there. We like to eat rice. And my manager asked me, okay, you have to assist and confirm the number of, stack of bags that you have. So what I did, I remember I was just counting length multiplied by width and then the height, and boom, I give that to my supervisor. And I remember it was a lady, and I'm still scared of her. She told me, Sandrine, did you check whether inside you had all the sacks of rice? And I didn't do that. And that was correct. There was like, the walls, the rice were just stuck again like a partition and I thought it was a complete square. So yeah, just sharing with you my back in the days experience. So yeah, important for you to check that there are no empty containers open. This is again to prevent manipulation or fraud. Ensure that proper control is maintained over all the tags, the count sheets. Record the number of all the documentation used and also unused, because you want to make sure that all the pages are consecutive, that the pages do not go missing, the count is complete and obviously accurate, and all inventory confirmed actually exists. So you do want to avoid manipulation through the loss of a page. Now, we're moving to the wrap-up procedures, the wrapping up of procedures. So again, I'm still referring to your case view document opened, and you'll certainly have time to go through that document after the session. So step number 1 is to identify and record on working papers the general condition of the inventory and any damaged, obsolete, or slow-moving items. Why? This is to have further considerations in respect of impairment. By having that noted onto your procedure document, this will give an indication to the audit team around considerations for impairment. If inventory is obviously damaged or gathering thick layers of dust, inquire on the day of the count. As part of your wrapping up procedures, recommended best practice is to ensure that procedures designed to record the movement of inventory during the count are operating effectively. And we've discussed about that in length earlier around the movement of the inventory, the approach of the staffs to that movement. Do they know how to record those movements of the inventory during the count? Next, record the cutoff numbers of all inventory movement documentation and obtain copies of all or a number of the client's final stock count lists for later follow-up. So we record, so if we conclude on that particular slide, we record the cutoff numbers for use during the audit as further verification of the correct numbers will be done. Then, of course, the objective of wrapping up is to have the final stock list, right? We want that final listing of stock, and you want to ensure that any changes do not happen subsequently. You also want to agree this list to the inventory listing at date of the audit, or to the trial balance if it contains the value of total inventory. This is so important, so crucial to ensure that you can give confidence on that value, on that number in the trial balance. So I'm just trying to also think of an example here. So let's imagine building a road on one side of the river, right? We don't have any rivers in Mauritius, very small. but that's fine. Let's take that example. Then you want to build, so imagine the construction of the road on one side of the river. Then later, you continue the road on the other side of the river. And they're perfectly lined up and they look great. But everyone gets stuck on the side of the river because you didn't build the bridge. So that's exactly what's happening here. If you do not agree the final count listing to the value we audit in the financial statements, you didn't build the bridge. It's just everybody is on the side of the river. I haven't seen that my slide has this photo. It's literally, it's not a river. There are trees on it, but the building of this bridge is extremely crucial. Agreeing the final count listing to the value that we audit for the financial statements. Now, moving to the documentation. And if you want, you can still refer back to your inventory count attendance work program to document that step. So remember, you are attending the count as a junior, as a first year. A reviewer has not, and sometimes none of the team on the audit have attended the count either. I hope you see where I'm trying to go. I'm trying to say is document enough to explain what was done for each procedure. You can take that full list of slides for your considerations and think about, having or asking to your firm for any Word or Excel documentation that they have to write down all your procedures. I remember back in the days we had the hard copies, the papers with the logo of the practice. Now, if your practice is using some other documentation like an Excel on Caseware or a Word, please do use that to document enough to explain in detail what has been done for each procedure. Do this on the date of the count or very shortly thereafter. Do not wait until the audit work starts. Because you won't remember. We're all humans. You've got so many to do. You've got your studies as well. You've got much pressure on you. So please ensure that you have done it on the day of the count or very shortly after. Then, I've already mentioned it, but very often your firm would have the additional working paper, accounting working paper to document your count versus the client count. If you're not aware of this, please do be curious, ask your managers and partners. They are here, they're coaching you for that. I'm excited with that topic. I hope that you have also enjoyed that session. I'm now going to go through the list of questions. I see some questions pulling and flagged for me. So I'm quickly going to go through the list of questions. All right, Godfrey, no problem. Yes, see some people had to step out. That's 100%. No, actually, we don't have any other questions. It was just okay. don't see any. I was about to say procedures. Don't see any questions for me to answer based on the lists. Let me go through what is next. I'll give you guys time. If you have any other questions that you want to ask, please use the questions section to ask for questions. We had an exciting topic today around stock count attendance, the implication of your ISA 501, the implication of your ISA 540 revised estimates. Of course, guys, you have to think of the whole ecosystem as one. Think about your ISA 315 as well, and all the different ISA that supplements this 501. On the 7th of March, we are all meeting back again to go through the financial statements of Caseware, where we're going to go through the content management wizard, switching on notes, drill downs, cover pages, directors' reports. We're back on the 8th of March for another exciting topic around cash and cash equivalents and all the different, procedures. We're going to go granular in the procedures as well, like we've done today. On the 15th of March, another exciting topic around general expenses. So all of you here in this session, we're going to go again through general expenses. If you're using financial statements on the 4th of April, we will show you how to balance a note in Caseware. How do you check for a note that is not balancing? Very interesting and much weighted, the balancing of the cash flow and the related party notes. And then on the 5th of April 2024, for Audit International, we're going to cover the employee costs. Please do connect with us. I'm looking forward to connect with all of you guys on LinkedIn. You can connect with Adapt IT or Caseware LinkedIn profile. We've also created a page, the Get Ahead Audit Intake, guys, to be able to get the gifts. Yesterday we've got a winner. You have to be subscribing to our page, Get Ahead Audit Intake 2024 on LinkedIn. We are also on YouTube, Facebook, Twitter. Please do connect with our different channels. We insert tips and tricks for our champions, for our new intakes, and of course, we do not forget about you, partners, managers, supervisors in the room. We've got you also covered with advanced tips. It was a real pleasure to be with you today, guys. Thank you so much for all your participations, for your questions. I look forward to connect with you soon on our different channels. Enjoy the rest of your day. Thank you all. Goodbye.